It was a fantastic weekend down at the Cardano Summit, and there have been lots of announcements, lots of new partnerships, and excellent things occurring in the Cardano space. Now, in this video, we're going to take a look at the technical analysis. It's been a few days. We have obviously seen some volatility on the smaller time frames, and we've seen a little bit of a push back to the upside today. So we're going to jump into the TA. We're going to take a look at the weekly, daily, and hourly charts to see exactly what's going on with the price action of ADA. If you do find this video useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Right, with that said, done and out of the way, let's get right on into this weekly chart to see exactly what's going on with ADA. Right, we can obviously see that we are still intact with our 5 impulse waves to the upside. Okay, this really kind of started back in March 2020. We can see that the peak of wave 1 was around July time. The low of wave 2 was from September. We started to see a good push to the upside from November. And we saw this kind of peak out with wave 3 up here in the 10th of May. Then Bitcoin pulled us down. We found a triple tap at the bottom. First one down here in May. The second was halfway through that fourth wave correction, coming in on the 21st of June. And then from there, we saw a third tap, which is the last one there, and the 19th of July. Then from that point, we saw a nice surge to the upside. We set a new all-time high, and we had that correction coming back down and a double tap on, or actually it was a bit of a triple tap actually again, just down on the 618 area on the Fibonacci retracement tool. Now we started to see a nice big or potential start to a nice rise back up again. And again, we are targeting $7.22 and with a theoretical push to $10. I'll get into what that looks like in a moment. And we obviously have the stochastic oversold during the bottom of wave 1, and of course oversold for the bottom of wave 2. We obviously have wave 4 oversold, and then what we were looking for was this overbought area, right? Wave 1 overbought, wave 3 overbought, wave 5 should have been overbought. When we started to see this volatility come in, and actually, this weekly chart has been corrected and been pulled back down, getting us into a nice area where we could start to see something like this occur, where we saw this nice surge to the upside. So overall, this is actually looking like quite an interesting point, because the fact that we lowered this does put us in a position to push harder and higher than previously maybe expected. So interesting kind of consideration over the month of September. If we take a look at the history, actually some of the previous waves that we'd looked at were very much in line with September. For example, right, wave 2 was in line with September, so getting pulled back was understandable. Now obviously we pumped before September, and then we saw the correction in September, like historically we would normally do. So obviously, as we finish this month out, I am still expecting a little bit of volatility, but we are only days away from leaving this altogether. Now, of course, there is the cup and handle pattern that's forming. And again, this does show us with a nice surge to the upside for the month of October. So some interesting price discovery on ADA is due, and I'll go through my targets on that on a separate video. Once we kind of get past the volatility, I'll show you my expectations for the month of October. So overall, the weekly chart's looking pretty good. The structure is still intact, and we have got some interesting price discovery on the horizon, in my opinion. And the stochastic pulling down allows us to continue that push to the upside, but if we do expect a little bit more volatility for the next few days, we might actually come all the way down to the oversold area one last time before we get that push, which will be pretty cool. Right, let's jump down into our daily view, and it's a daily that allows us to take a look at that volatility on the kind of smaller time frame, but obviously it is a daily, so you get a pretty good overview as well. So again, in here you get that idea of that cup and handle forming nicely, and we do have the downward trend really kind of hitting home. We obviously had on the 25th pushing up a little bit here, and just wicking above it before getting pulled back down in line. Now we do have the yellow box area here. This is the 618, 702, 786 area of the Fibonacci, and again you can see that we're having these pushbacks on these key areas. There was an upward trend that got invalidated with our triangular wedge, which is understandable considering the volatility in Bitcoin and all the regurgitation of FUD. But again, we had a good surge back to the upside up here on the 22nd and 23rd before getting rejected again on the 24th, right? So that would be Friday. And then obviously from there, we started to see a good day on Saturday, and then obviously pulled back yesterday a bit. And we're pushing up again today, right? So some interesting kind of areas, but where are we on this actual daily chart? So we actually have risen the stochastic RSI up from this lower area here. And again, this is something that we saw previously when we were down at this low level here. Now we don't move straight up. You do actually tend to have these kind of corrections in the middle or these small pullbacks as you continue that surge to the upside. Now, what we can see here is we would ideally like to maybe just have another pullback just to kind of get us a little bit lower, a little bit more primed. But it's not necessary. We can come up here and we can be up here for a while. So again, we could start to just kind of trade down sideways, maybe get ourselves into this triangular wedge just here between the 702 and our downward trend. If that is the case, then we could expect one last kind of pullback and then a big surge to the upside overall. So everything is getting closer to kind of finishing and completing the month of September, and we should be looking for some pretty good surge to the upside with the old cup and handle pattern that has been forming, and that's got an interesting target associated with it. So on this this daily chart, everything is okay, but we obviously have to acknowledge some of the underlying data that could be potentially causing us some problems. So when we talk about potentially putting back down to maybe $2 range, maybe $1.90 in this kind of area here, I do not anticipate us falling lower than $1.90. But there is a really strong support at 183 if we did need to. I don't think it's likely though. I think we're actually only going to be trading between where we are right now at $2.24 and $2 if Bitcoin has another pull back to allow us that kind of to form that triangular wedge ahead of that big surge to the upside in October. So with all that being said, let's check out what's going on with the underlying data. For this, we use the Evide.io dashboard. And on here, we basically, they use artificial intelligence and machine learning to help us understand the underlying value of cryptocurrencies. And in this case, we are taking a look at Cardano ADA. We are on a B2 rating. And we can see here that we've got Fear and Greed Index that is a rating of D. Okay. And we'll get into more of this in a moment. But basically, the lower the rating on here, the more fearful. The higher the rating, the more greedy the market is feeling for ADA. We have moving averages at C2. Again, that's quite an obvious one that they're going to be affected considering the volatility that we've had during the month of September. So we can see that they have been affected by it. And we can obviously pull back down here. We see the Sharpe ratio. Now, the Sharpe ratio is an A2 rating. So what is the Sharpe ratio? Well, the Sharpe ratio is your risk-reward ratio. It shows you the risk to holding ADA versus the rewards of holding ADA. And the fact that this is an A2 rating is actually showing that there's preferably more reward than risk in terms of this ratio for holding ADA, right? So by buying and holding ADA right now, it's actually saying that it's more probable to be rewards than losses. That's kind of how my interpreting this particular metric, right? So basically that risk reward ratio. Now we do have, of course, this moving average that flows through here, and here we can see that we are above that moving average. We had a slight dip down here on the 21st of September, but we were very, very briefly in there and we moved right back out. So above the 50-day average for the Sharpe ratio, a nice A2 rating, so the second best rating that you can get, and it's an interesting metric, the risk reward ratio. So overall, that's actually really positive and it's in your favor, right? The profitability, the return on investment is an A1, the best it can be. We have the AMI-HAD ratio in A2, so AMI-HAD is your liquidity, and so therefore we're not actually indicating any problems with the AMI-HAD ratio, no problems with liquidity, no problems with profitability, no problems with the risk-reward ratio. So where are the problems when it comes to Cardano? Why are we only a B2 rating overall? And it comes down to two things. We have obviously affected the moving averages, which is obvious because we've been in a month of decline. And even beforehand, we had huge problems with what was going on when we actually completed wave 3 and went into wave 4, right? We had a couple of months of basically just going down, and then we had a good surge to the upside, breaking out of that wave 4, going into wave 5, only to have us pulled in a little bit by volatility with Bitcoin, a little bit of manipulation, etc., right? So the moving averages were affected, right? So that's one metric that's obviously been affecting the overall. The other one that's super interesting is the Fear and Greed Index at a rating of D. Now, for those who are unfamiliar with the Fear and Greed Index, index, the Fear and Greed Index, can be interpreted in many different ways, right? The first is, oh my God, it's fearful, I will sell. And the other one is that it's greedy, it's going to go up, it's FOMO, right? And that's the more amateurish approach to it. The more traders approach, the more scientific one, depending on when you couple this with your chart data, is that when it's greedy, you take profits, and when it's fearful, you buy the dip. Okay, and in the case of where we are with ADA, and we take a look at the charts here, and we have this good surge to the upside on our weekly, right? We're talking about going up to $7.22 to $10 range. And then you see the market is fearful. That's the buy the dip scenario. That's the fear that you buy. And when it gets greedy at the top of wave 5, that's the possibility where you start thinking about taking those profits, right? Because you'll find that retail investors will FOMO in when it's all greedy, but actually what the traders are doing are taking the profits at the top, and that's why you see this pullback here, right? You see it pulling back down. So the fact that the market in Cardano is fearful right now is an opportunity for many. It's an opportunity for me personally to continue buying that dip, because we can see down here that the Sharpe ratio, the risk to holding ADA, is in our favor. We can see the profitability is in our favor. There's no problems with liquidity. So overall, this is the kind of fear that I like to buy up. So I really wanted to just kind of highlight what's going on here from the artificial intelligence machine learning perspective. In an unbiased way, it is basically telling you exactly what the data is suggesting. And right now, the market is fearful, and that's an opportunity, in my opinion. So let's take a look at what's going on with the hourly view. Because this is where we start to see, what might be happening in the next few hours to maybe day or so, right? And here we can obviously see that we had an interesting kind of spike to the upside up here, right? Okay, and this was kind of leading up into the event, right? We had this last push, this last candle just up here as the event started. Okay, so this 4 to 5 o'clock candle right here is when basically Chainlink was announced. Okay, so we had a good push to the upside when Chainlink was announced, and then we pulled back. Okay, it was a sell the news event. All the hype building up, and then sell the news. Okay, so this is usually what you see when you have events like these, or announcements like these, specifically if there's a huge build up to it. If the announcement is completely dropped on you and there's no time to kind of speculate on it and to push the price up over time, then you'll find that actually the news will break and the needle will move up, right? However, if an event is coming, people are talking about it, people are speculating it's going to be some fantastic news, they're buying it up before it gets there, and everyone thinks when the news breaks it's going to go higher, when the experienced people in the space will they'll let it rise up, and then they'll sell it, and you get this kind of scenario. The price pulls all the way down, and then obviously we go into the 26th of September, and we obviously see a little bit of a break back to the upside, a little bit of news getting broke, so you start to see a little bit more profit get taken, and again you then start to see another push to the upside. Now, what do we see from the volatility of this in terms of the stochastic RSI? Well, here you can see that we were pushing up, right? There was absolutely no need to see this pullback down here. Okay, so this pullback is literally just, I'm going to sell, I'm going to take the profits. Everyone kind of, those experienced traders, they're anticipating that all the other experienced traders will be doing the same. So we'll sell it here, and the news is broken, we'll just sell it off or buy it back cheaper. And that's what you saw. It oversold for a long period of time, riding it pretty much all the way down, because you were oversold pretty much from here. Okay, so from 10 o'clock in the evening, and we just kept falling down all the way till 8 a.m. Okay, then we started to see, okay, well, some people are buying up because we hit a key level here of the 786, previous area of consolidation, resistance. So there was a small push to the upside. This then took us back to the overbought area, finding resistance, another opportunity to take some profits were held right here. So again at $2.29. So you start to see the pullback here. Now, what was interesting is we lost momentum pretty much out of the stochastic within 2 hours, right? We can see this motion here. It was just like, bam, we just lost it all right there 1 second. And then we started to push back up again, but this is not in line with what we want to see in the space. But basically we had 3 hours of pushing back up to where we were previously, right back up into the overbought area, small pullback here, and now we are kind of just not doing too much. So the expectation should be at this point, in my opinion, to have a bit of a pullback, okay? And the reason for this is a couple of things. One, we obviously have loads of fear in the space, and there's a lot of retail investors who are fearful. The price of ADA just keeps going down. It's not doing anything. It just keeps falling. So therefore, they're going to sell at a discounted rate. That coupled with, and that fear is obvious when you actually take a look at the charts from a couple of perspectives. One, you see this happen in your stochastic RSI, but two, you can see that the selling volumes here were higher than the buying volumes, right? So we pushed up. There was a couple of higher volumes just here, just trying to capitalize on the profits. But when you take a look at this little section, you can see the volumes were dropping, okay? And even here, the volumes are dropping. And yet, when you actually start to see the selling occurring, the volumes increase. Okay, so you know that there's fear. There's more people wanting to sell than there are to buy from a retail perspective. And where we are hovering right now in the stochastic, I mean, we might be able to push up a little bit up to that 229, but I don't think we're going to go any higher than that. And I do anticipate us pulling back down to our 786 area at $2.15. And that seems to be the most logical space. Now, there's no guarantee that we'll go all that way. 218 looks like a pretty interesting area, but we might wick down and then still get that close above that area. Some years you might be quite mindful over these areas. You can see it happens that you come into here a couple of times and then you're straight out again. So we are looking to lower the stochastic, some more volatility on the smaller time frames overall, just to kind of get this thing rolling a bit. Now, I'd like to be wrong on that. I'd like to see this volume build up, but coupled with what the artificial intelligence is telling me from the fear in the space, and of course looking at the current volumes and the way that the trading patterns have been forming here, my expectation is that we will actually lower the stochastic RSI, and we'll do a little bit of damage to the price, a little bit more, so more opportunities will be had. Now, if we do, however, just continue to keep the volumes low, we could lower the stochastic and just steadily lower our price down, maybe to around that $2.19 area, and maybe we won't come down this low. If, however, that volume spikes up with some selling volume behind it, then do anticipate pulling down hard and sharp all the way down to our 786 area of $2.15. But overall, this is a small time volatility that I've been talking about. I do not think it's going to last forever. As we finish all of this kind of sideways trading in this area, I am anticipating a huge blow to the upside for Cardano, and the month of October I do believe is going to be a fantastic month for many cryptocurrencies, Cardano included. Guys, I'm going to leave the video there. If you have found it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.